This is the lowest amount you need to let compounding work. Hey friends, want to know the smallest amount you need to start to let compound interest do its magic? The answer might shock you and change your entire financial future. Most people think that they need big bucks to start investing, but what if I told you that even with just a $50 a month, you can build a serious wealth over time? Enough to travel, buy a car, even retire comfortably. That's the power of compounding. Today, I am revealing the absolutely minimum you need to start. How compounding actually works, explained simply. A step by step formula you can follow right now. Real examples proving it really works, even starting small. So stick around, you will learn how a tiny seed investments can grow into a mighty money tree over decades. And trust me, by the end, you will be itching to start if you have not already. The common myth: people assume they need thousands to invest. I will start when I have more money. Sounds familiar? This delay is the number one blocker to wealth. 2 decades ago, my cousin Sarah waited, and guess what? She missed out on tens of thousands in return. The real problem, procrastination, is equals to the time lost, and time is compounding's best friend. The earlier you start, the more the miracle of compounding works for you. Even tiny amounts add up. The emotional impact. Ever felt defeated looking at a bank account with $100? You are not alone, but that's exactly the moment to act. Not wait until you hit $10,000, because that $100 invested right now could grow to the $10,000 with compounding even before you hit enough to feel comfortable. The high stakes: every year you delay is lost compounded growth. By age 30, you will have missed 10 years of compounding. By 40, 20 years, that adds up to thousands of dollars in foregone gains. You don't need a lot, just a consistent small contribution. I will explain the formula, why it's effective, and how to start with almost nothing. The formula overview. Let's break it down. The lowest amount formula uses three things: your monthly contribution, the expected annual return, the time horizon in years, using a back future value formula. This can be seen on the screen. Why monthly versus lump sum? Dollar cost averaging smooths out market volatility. Consistent habits builds discipline. Even a $25 per month is powerful. Plugging in real numbers. Let's assume C is equal to the $50 per month, R is equal to the 7% annual return, that is 0.07. T is equal to the 30 years. Now compute. Monthly rate is equals to the 0.07 upon 12, that is approximately 0.005833, and 1 plus rates to raise power 360 is equals to the 1.005833 to raise power 360, approximately equals to the around 8.1. So fair value factor approximately be 8.1 minus 1 divided by 0.005833, approximately equals to the 1222. So time C is equal to the 50 into the 1,222 multiplied by 1.005833, approximately equals to the $61,300. So with just $50 per month for 30 years at 7%, you end up with over $60,000. What if only $25? With $25 per month, same variables, future value approximately equal to the $30,000. Enough for a down payment. What if you start later? Say you start at 35, time is equal to 25 years. $50 per month goes towards the $32,000. Delay costs you are nearly half. Comparison to the lump sum. It's not about timing the market, it's about a consistency, sensitivity to returns. At 5%, $50 per month goes toward $39,000. At 10%, $50 per month goes to toward $93,000. Show the power of growth rate. Does this account for inflation? No. But even adjusting, it's a strong foundation. Starting early creates options. The lowest amount we see, $25 per month, is the bare minimum that actually compiles to meaningful results. That $30,000. Some say $1 per day or $5 per day, approximately equal to the $150 per month, works too. But even $25 per month is powerful. The real answer, technically, the lowest viable is $1 per month. It works mathematically. But practically, behavioral science shows that $25 per month is the minimum to stay committed and make it growth worthy. That's work out to $1 per day. Add more than you can. If you can move from $25 to a $50 to a $100 as income grows, compounding accelerates thanks to the exponential effect. Famous example, Warren Buffett's early start. Buffett started investing small in a Buffett partnership at 19. His returns skyrocketed thanks to compounding over decades. Here is a case study. Anna's age is 25, depositing $25 per month for 40 years, goes towards $70,000 at retirement age. Micah's age is 35 and starting at $50 per month for 30 years, goes towards a $61,000. I began with a $50 a month at 23 and now have a $45,000 at 27. I wish I had begun with the $25 instead of waiting until I could invest a $500. Academic evidence. Studies show that those who start investing small early acquire more wealth than those who start late, no matter the amount. Behavioral science insight. It's easier to automate $25 than to find $500. Micro habits beat motivation. Inflation adjusted perspective. $25 per month over time builds a nest egg that beats inflation. Comparison with others. Those who waited until they could invest a $5,000 once often lost out to early small monthly investors. What about crypto? Even in volatile assets, compounding still applies, but consistent buying wins over time. Decide on your minimum. Start with at least $25 per month. Choose an account, index, fund, robo-advisor, IRA/401k. Automate via bank transfer or payroll deductions. Reinvest dividends. Increase contributions when possible. Aim for plus 10% annually or with raises. Low cost index funds 0.03% approximately to 0.10%. MER. Dividend reinvestment plans, e.g., EST. Dividend reinvestment plans, ESG, or thematic funds if desired. And viewers consider global index via mutual funds or funds accessible locally. Use balanced allocations, that is, for example, 80-20 equity bonds. Rebalance annually. Write down goals. Track growth every 6 to 12 months. Use calculators or apps. I can't afford $25. Reduce coffee. Skip dinners out once a week. Markets are scary. Diversify. Stick to plan. I am late. Start anyway. Even $100 per month from age 40 is better than nothing. Compound interest calculators, budgeting tools, YNAB, Mint, investment apps, Vanguard, Fidelity, Betterment, Stash, etc. Text. Stop procrastinating to yourself. Set up an automation for $25 per month today. Comment below what will your first contribution be, $25 or $50? Thanks for watching. If you found value in this, smash that like button, subscribe for more personal finance insights, and drop a comment. What's the lowest monthly amount you will commit to? $10, $25, or $50? Let's help each other and stay accountable. Share with someone who says, I don't have enough to invest. Remind them all they need is $25 per month to start.